And so when you strip away all the risk, you get pure digital property. Why is it going to go up? It's going to go up because capital is flowing from the more entropic state, from the state of anxiety and risk and confusion toward the more ordered state, a less risky state. Think of water at the top of a mountain. Why does the water flow downhill? Accidental? The waterfall. Scary turbulence? But what if it stops? It's flowing downhill because of physics, because it's a lower energy state for the water to be at sea level than for the water to be 1 mile up. Why is money flowing into Bitcoin? Well, I'm going to take all your money, put it in random countries and random banks in Africa. Maybe I spirit it with a magic spell. And then I say, okay, it's Monday morning. Your money's in random banks and random countries in Africa. Would you like to bring it back to the US or would you like to leave it there? Right? Accidental? No. You're going to bring it back to a place you feel comfortable. Capital flows to security. It flows to where it's treated the best. And so money is flowing, capital. I'm using money as a phrase for long-term capital. It's flowing into Bitcoin because it's running away from Russia and it's running away from China and it's running away from Africa and it's running away from Venezuela and Cuba and it's running away from South America. It's even running away from Europe. If you ask the Europeans, the very simple test, do you prefer the digital dollar or the digital euro? 99-1, they prefer the dollar to the euro. In their own country, they don't want the euro. Everybody wants the dollar. Everybody wants to live in the US. Everybody wants their property in the safe apex network of the world. So the capital is flowing into Bitcoin at 60%. The traditional method of storing your long-term capital as the S&P index is 15%. What's going to happen is that more and more capital is going to flow from the 15% to the 60%. More capital is going to flow from the 20th century to the 21st century. You got $1 billion of warehouses built in 1980. They're rusting, right? They're falling apart. You're going to have to rebuild them. You want to rebuild them for another 40-year run, or you want to put it into Bitcoin, right? So money flows from the past to the future. Money flows from physical to digital. Money flows from high risk to low risk. Money flows from insecure to secure. Money flows from the east to the west. Bitcoin simply represents the highest form, the least disorderly, least risky form of property rights. The 60% will track toward the 15. So over time, the S&P index and Bitcoin will head toward each other. So what do I expect? I think Bitcoin, as it gets bigger, it goes from 60% growth rate to 58 to 55 to 52 to 50 to 48 to 38 to 35 to 33, and the traditional world, the 500, the $150 trillion of traditional equities, that's basically a 15%er or 12 to 15%er. They'll start to incorporate Bitcoin. Maybe they'll start to creep up toward Bitcoin, but they'll also struggle with all the entropic risk and competition and weather and war and famine. So they're always going to struggle. Bitcoin's going to become half the size of equity. It'll start to head up toward the size of equity. And then there's $300 trillion of fixed income, bonds, preferred stocks, all sorts of ETFs that hold fixed income instruments, currency equivalent, sovereign debt. That yields about 5% right now. So 5% before tax, maybe 3 or 4% after tax. So as people get more comfortable with Bitcoin, they're going to move money toward Bitcoin. And then companies like MicroStrategy, well, we're going to create an equity that pulls capital from the equity capital markets, from the Magnificent Seven, from the S&P. It'll flow into MicroStrategy stock. And then we will create bonds, and the bonds will pay you twice as much or 3 times as much as the bonds in the traditional capital market. So as we issue those bonds, the capital that's in fixed income will jump onto a Bitcoin-backed bond, and the equity will jump onto a Bitcoin-backed equity. And over time, you've got $500 trillion of this traditional capital think of it as sitting up on that mountaintop, and it wants to go to ground. It wants to go to a simpler, more elegant, less risky, less disordered state, a lower energy state.
Michael Saylor recently came out to propose a prediction that may become a reality sooner than initially thought. Saylor imagines the U.S. wielding 4 to 6 million bitcoins, roughly 20% of the crypto's total supply, as a conceivable strategy to address its $34 trillion debt. While this calculation seems audacious to some, the underlying narrative is compelling and has been likened to a digital gold rush. But is this simply an eccentric billionaire's fantasy or a revelation for U.S. economic strategy? Welcome back, everyone, to Investocracy Crypto.
You know, this nation became great because of the Louisiana Purchase. We bought a third of the country from Napoleon for a few $1 million. Then we purchased Texas and California from the Mexicans for a few million more. Then we purchased Alaska from the Russians for a few million more. We didn't even know there'd be $1 trillion of mineral rights underneath Alaska when we purchased it. They called it Seward's Folly. But what I'm describing is manifest destiny. If you want to create a great nation, you have to build it on valuable property. You have to know, where is all the money headed? Where is the future? When we bought California, we didn't know there'd be a Hollywood. We didn't know there'd be a Silicon Valley. No one really considered. In 1867, we didn't have a petroleum industry. And so where is the money headed in the future? The money's headed to cyberspace. Bitcoin is property in cyberspace. The manifest destiny of this country is to own cyberspace. And I think that President Trump understands the value of owning scarce, desirable property. If we go to cyberspace and we buy Bitcoin and the nation embraces Bitcoin, then all of the capital in the world, all of the Chinese money, all the Russian money, all the European money, all of the money from the 20th century, the money invested in a Siberian warehouse, the money invested in fill in the blank, anything you could possibly own in Africa, all of that capital is flowing into cyberspace. It's going from physical to digital. It's flowing from the 20th century to the 21st century. The 21st century is going to be 1 billion AIs thinking 1 million times a second. And what are they going to be using to move their money around? They're going to use digital money because they can't get a bank account. They can't get a credit card. I have to approve my wire transfers from my bank once a week. It takes about 20 minutes, and they ask me on the phone whether the money should move.
It's a good problem with 478,740 Bitcoin, Michael.
The computers...
We don't feel too bad is what I'm trying to say.
Yeah, I get it, but my point we've been doing it that way for 50 years. And if you look at the way the digital economy is going to run in the 21st century, it's going to be 1 billion computers thinking 1 million times a second, moving assets at the speed of light. Bitcoin represents digital capital. That network is $2 trillion today. It's going to be $20 trillion in 4 to 8 years. It's going to be $200 trillion in 20 years. Then it's going to grow faster than every other asset in the world. It's going to continue to grow.
Michael Saylor thinks Bitcoin could be the frontier where the old rules of capital meet the new dynamics of digital innovation. What's more, Saylor posits that the digital landscape is not just a virtual escape, but a foundational shift comparable to the industrial revolutions in history. Calling Bitcoin digital gold isn't merely poetic. It highlights a key distinction between consumable resources like oil and accumulating assets like Bitcoin.
And land is physical property. When I run electricity through semiconductors and I create a wall of encrypted energy, I create digital property. Bitcoin is digital property. You should own it. Your company should own it. Our nation should own it. It is the future.
In your perspective, how soon do you think we're going to be buying Bitcoin and have within our U.S. reserve at a timeline? Do you think it's going to be 12 months, 24 months?
I I think there's an appreciation of the power of Bitcoin throughout the cabinet, throughout the House, throughout the Senate. There's going to be a political process by which we build consensus with the White House, the Senate, and the cabinet, and find the right way through. But, you know, what I would say on this topic is the U.S. could own 20% of the network like that for free. The dollar would strengthen, the nation would be enriched. And the real promise is if you own 4 to 6 million Bitcoin, you're going to pay off the entire national debt. You're going to neutralize it. We can generate a $50 trillion to $80 trillion benefit to the United States people, to the citizens, to the taxpayers, and we can do it simply by seeing the future. It cost $6 million to buy Alaska. The payoff was $1 trillion. Just like right now, you can literally buy it for a song and dance. That's the opportunity. The risk is that you wouldn't want the Saudis to buy it first, or the Russians, or the Chinese, or the Europeans. And there's only room for one nation state to buy up 20% of the network. And obviously, I think it should be the United States. I think it will be the United States. It's a way for us to enrich ourselves and emerge as a creditor nation in a matter of a decade. It's also a way for us to ensure that we're the economic leaders in cyberspace and the digital economy for the next 100 years. And if we do that, every one of our allies will follow us, and then all of our enemies will end up having to buy into the network once it passes 10 or 20 million a coin, and they will enrich us.
When you consider the strategic reserves of the U.S., valued at $29 billion against a hypothetical Bitcoin reserve of $392 billion, the numbers alone paint an intriguing portrait of potential, despite seeming like peanuts against the colossal national debt. Strategy serves as a testbed for this bullish Bitcoin strategy. Holding over 190,000 Bitcoins, the company has experienced significant gains, rising 360% in its share value over the past year. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
What I would say to everybody in this room is if you want freedom, if you want liberty, if you want to live your finest life, you're going to need economic power. You need physical power. You need political power, but you need economic power. Bitcoin represents economic armor. When you put on the suit of armor, then no mayor, no government, no collectivist, no socialist can debank you. They can't take your money away. They can't impoverish you. Just like a gun is a deterrent, Bitcoin is a deterrent, because if you have wealth in Bitcoin, you have the option to move it to any jurisdiction, and you can keep it, and no one can take it away from you via force of violence, no matter where you are on Earth. And so Satoshi gave us an opportunity. I hope I intrigue all of you with the opportunity, and you go do the research and determine for yourself how you benefit from it. But I just leave you with the thought that Bitcoin is economic armor.
As the dust settles, Michael Saylor's vision stretches before us, a vast digital horizon teeming with promise and risk. With current Bitcoin valuations suggesting a lucrative forecast, Saylor's narrative invites viewers to envision a future where statesmen and citizens alike wield Bitcoin not just as an asset but as a strategic tool in the arsenal of 21st century economics. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.